Okay, let's have a look at shares in Agnico Eagle Mines. They've been hitting record highs this year, and that record high gold price has not hurt. Gold is down a little bit today. Profit in the latest quarter, EBITDA came in at $1.6 billion US, a little bit ahead of expectations. And we have the CEO joining us now, Ammar Al-Joundi. It's great to see you.
Thank you, Andrew. Pleasure to be here.
I was just looking over your portfolio. I mean, you do things in a big way, don't you?
Do.
Production well north of 3 million ounces a year. And that Detour Lake alone, 700,000 ounces or so every single year.
Well, Detour and Malartic are two of the 10 biggest gold mines in the world. And Andrew, if we get them to 1 million ounces a year, which we have a vision to do.
Each, 1 million ounces?
We will have two of only 6 in the world. So right now there are 4 mines in the world producing 1 million ounces. One's in Russia, one's in Uzbekistan, one's in Indonesia.
That's Grasberg, I guess?
Yes.
Yeah,
exactly. And then Newmont and Barrick share the one in Nevada. So we could find ourselves, and we expect to find ourselves, in a situation where we would have 2 of only 6 mines in the world producing 1 million ounces a year, and 2 of only 100% owning 2 of only 3 in the Western world producing 1 million ounces a year. Now we still have some work to get there, but that's our vision.
But you're going underground at Detour Lake, that's the plan?
We're going underground at Detour Lake, so we're on that already. We've allocated a considerable amount of money to do that, and we're making good progress. And at Malartic, the vision would be that we would supplement the existing mine with potentially a second shaft, and potentially some feed from 2 satellite deposits, one called Marban and one called Wasamac.
So Detour Lake Mine in Ontario and Malartic in Quebec, famously, yeah. So market cap, you're about $59 billion US today, in line with Newmont, and I know that's not necessarily meaningful, but you're in line for being the most valuable gold company in the world.
We are. We know the people at Newmont really well. They're great people. We never look at absolute market cap. We look at per share metrics. And we're delighted that we've been able to give virtually all of the gold price increase as margin expansion, and that's really what's helped our share price. Let me put something into perspective, if I may. In the last year, the gold price is up about $1,000 an ounce. Tremendous. Our cash costs this quarter, Andrew, were $2 higher than our cash costs a year ago. So if the gold price goes up $1,000 and we can deliver 998 of those dollars to our owners, that's a good thing.
What about stock, your stock buybacks? Can you give us some idea of what your shares outstanding have declined over the past while, Ammar? I don't know if you have any number to have.
Well, we have about 500 million shares outstanding. And, we've bought back, I think, in the neighborhood of about 120 million dollars worth of stock. So it's a long way to go to make a material impact on your total outstanding. But I think we're going to be accelerating the share buyback and just doing more of that as we're generating a lot more cash at these gold prices.
And how much of your free cash flow now do you use for buybacks?
So we've returned about 42% of our net free cash flow to shareholders directly, either through a dividend or a share buyback.
It's interesting now, of course, the gold industry has been faulted for going after production growth obsessively, and of course it can lead to project blowouts, etc. So you're not at the moment increasing your production that much. You were at about 3.5 million ounces last year. You'll be maybe 3.4 million this year, 3.4 million next year. This is from National Bank estimates. So in the next year or so, you're not growing production that much.
So we give guidance out 3 years. The next 3 years, it's flat production. Our production this quarter was almost exactly what it was a year ago in the quarter. So for the next 3 years, Andrew, it's pretty flat production. Where we really see the potential for substantial growth is starting around 2030, 2031, when a number of big projects we're working on will come on stream. And by the way, and this is forward-looking statements, hard to predict.
Yes.
But we don't anticipate having to issue any shares to do that. So our objective is that all of that growth is not only in an absolute form, but on a per share basis.
Right. I wanted to ask you about that. I wish companies and analysts, I wish they would publish stuff on a per share basis more. Because that's
I agree.
Yeah. Because it can be misleading. Do you have much debt? Can you remind me?
We have no net debt.
Okay.
So we have about 1.1 billion of absolute debt and about 1.1 billion of cash. We expect to be generating an awful lot of cash at these gold prices. So no net debt, moving towards hopefully a pretty substantial net cash position.
Yeah, because your all-in sustaining cost now is overall $1,250 to $1,300.
Correct.
So at 3,500 gold,
you're making an awful lot of cash flow, which is, again, this is why I use that example of if the gold price goes up $1,000, our owners get 998 of that. That's our job. This is why they invest in gold equities, and it's our job to give them the leverage. Andrew, we can't control the gold price, but we can control costs. And I have to say our team is the best in the world at doing that.
You have the huge mines in Nunavut, Meadowbank, Meliadine. Tell me about the caribou. Apparently in Q2, you have to rein things in a bit to let those animals migrate.
Well, the caribou have been an essential part of survival for the Inuit communities from time immemorial. And we're committed to being in Nunavut, to being good corporate citizens, but their culture, their livelihood, their history depends a lot on the caribou. So we have very comprehensive agreements, and frankly, what the Inuit tell us to do, we do it, because it's their land, it's their caribou, and we'll follow whatever rules they lay out.
So you sort of keep trucks out of the area or whatever's needed?
It's quite sophisticated, and we work with them, and if we have callers on some of the herds, and as the herds get close, we reduce operations, and if they get close enough, we stop. And we let them migrate, and that's a priority. So it's a very sophisticated thing. We work very closely with the communities, very closely with the elders, and we'll continue to do so.
Ammar, we'll have to leave it there. Thanks very much. I know a lot of shareholders are happy with you these days. Thanks for joining us.
My pleasure.
Ammar Al-Joundi has been our guest, President and CEO at Agnico Eagle Mines. We're out of time for this edition of Trading Day. Thanks very much indeed for watching the show this week. Have a wonderful weekend, everybody.